Let's talk to Craig Erlam. He's a senior market analyst at OANDA. Very good morning to you, Craig.
Good morning.
Right, very quiet market.
Yeah, just a little bit. It's been quite volatile this morning, I think it's safe to say. Brexit seemed to get people feeling a little bit optimistic yesterday, the prospect that we had a deal, that it could get signed off by the cabinet, and then as we've seen before, once the dust settles and we enter into a new day, then that's when the chaos arrives. Last time after the Chequers deal, it was the resignation of Brexit Secretary David Davis, followed by Foreign Secretary Boris Johnson. This time it's the resignation of, again, Brexit Secretary, this time Dominic Raab, and a number of other of his cabinet colleagues have followed, Esther McVey being one of those who was largely touted to before anyway. Massive setback for Theresa May, plenty of volatility in the pound. It's dropped quite considerably today, down around 1.5% to 2% against the US dollar, the euro, the yen, and others. And there's more bad speculation, it seems, to follow potentially. There's more speculation of further resignations. And on top of that, there's also suggestion on Robert Peston's Twitter feed that they could have the 44 letters needed to call for a leadership vote or a vote of no confidence in Theresa May as leader. So I think this bad day could get even worse for the Prime Minister.
Understood. Now, in terms of the equity markets, pretty flat, not very exciting. Is this all factored in?
I think it's such a domestic issue. Yes, it has some impact on Europe, but it is such a domestic issue that it doesn't really have great implications elsewhere. And one of the interesting things with the FTSE as an example, which is the UK index, it's so outward looking, and there's a number of companies that actually generate a lot of business abroad, that a weaker pound actually tends to benefit the index. I think it's around 3/4 to 85% of profits generated by FTSE 100 companies are generated abroad. So obviously, when the weaker the currency, when you convert that back for reporting, it actually improves the underlying profits as opposed to makes them worse. So we're seeing some support for the FTSE on the back of that, but broadly speaking, we're quite flat in the markets. I think a welcome flatness, to be quite honest, given the fact that we had that shock earlier on in the week and we had the sell-off back in October. I think a little bit of stability is more than welcome.
Understood. Okay, we've got one slide to go through. West Texas crude oil. We had 13 down days there or thereabouts, okay, and somebody suggested that technically it's very, very oversold now and ripe for some sort of bounce, even if that's momentum based. Would you go along with that?
Well, I think when you see a sell-off of this magnitude, then it is natural to start talking about some form of bounce. The question is it a retracement, which would suggest that we could see a good few dollars upside, maybe looking towards the kind of $58.50 to $60 range in the near term, or would it be more of a dead cat bounce, which is very negative, which would effectively mean we trade sideways or edge higher towards the kind of 56, 57 range before dropping again. The dead cat bounce is obviously the far more bearish of these, but I think broadly speaking, we're looking at this right now, and there seems to be plenty of downside momentum. It seems that every headline at the minute is negative, whether you're talking about Iranian waivers for 8 different countries, which means its crude output can continue to be higher than expected, whether it's record output from the US, Russia and Saudi Arabia, the world's 3 largest producers, or whether it's just simply inventory builds from reported by API and EIA, which we continually keep seeing now. Everything seems to be a negative right now, and the slower global growth and therefore global demand picture just adds to that.
Understood. So no reason right here, right now, for any sort of bounce?
Yeah, I mean, I think, like I say, a bit of a technical bounce would not come as a huge surprise. And like I say, going back to that 58.50 to 60 range, I don't think would necessarily be a bad thing. But given the momentum that there is with the bears right now, I think if we did reach those kinds of levels, my personal inclination is that you'd probably see a big test coming in from the bears and the sellers who would be looking to potentially drive prices even lower again. Obviously, there's never a guarantee of this, and we could just find some stability. But the market is looking very bearish right now. It's looking very weak in the near term. And we are seeing plenty of comments from, for example, OPEC officials suggesting, alluding to a potential 1.4 million barrel a day cut at the meeting in a few weeks in Vienna. But again, this is all verbal attempts to try and stabilise the market and stop the rot. And at the moment, it's just not working. I think actions will speak louder than words, and if markets continue to drop, then we will see that cut at the December meeting, which might potentially provide something of a bottom.
Understood. Craig, on that note, always nice to talk to you. Thank you very much indeed.
Thank you.